Hello, everyone. Um, Welcome and thank you for joining today's report launch event hosted by the Boston University Global Development Policy Center, or GDP Center. The GDP Center is a university-wide research center working to advance policy-oriented research for financial stability, human well-being, and environmental sustainability across the globe. My name is Mandy, a research fellow here at the GDP Center, and I'll be your moderator today. The session is being recorded. We will have time for Q&A after the presentation, but please feel free to add your questions anytime to the Q&A box. Today, we are here to launch a new report titled Greening the Steel and Cement Used in China's Global Infrastructure Projects. When we talk about climate impact of global infrastructure, the conversation often tends to focus on the energy sector and the types of energy sources that they use. But there is another major dimension that has received less attention, which is the materials used in the infrastructure in the first place. For instance, steel and cement industries alone account for around 20% of global CO2 emissions. In particular, China's overseas infrastructure financing has played an important role in supporting development in many countries, especially through energy and transport projects. At the same time, these projects use large volumes of steel and cement, which carry significant embodied carbon emissions. As global infrastructure demand continues to grow, especially in developing countries in Asia or in Africa, reducing the carbon footprint of construction materials will be essential for aligning infrastructure investment with climate goals. That's exactly where green procurement, or sometimes it's called buy clean, comes in. It is an important policy tool to address this challenge by incorporating carbon intensity requirements into the sourcing of steel and cement. And because China's overseas investment in infrastructure plays such a large role in Global South, integrating green procurement into these projects could have a meaningful impact, not just on project level emissions, but also on industrial decarbonization in both China and the host countries. The speakers with us today are Hanjie Wang, former postdoc Global China Fellow at GDP Center and lecturer at the University of Washington, Cecilia Springer, non-resident fellow at GDP Center, and Ali Hassanbigi, founder, CEO, and research director of Global Efficiency Intelligence. They will first walk us through the numbers, the scenarios, and their main findings, and then followed by and they'll also answer any questions that you might have. I'm very pleased to give the floor to them now.
Great. Thank you, Mengdi, and thank you to everybody for being here today. Just to give a quick outline of what we'll be presenting today from this report, I'll share a little bit more background beyond the great introduction that Mengdi already provided on some of the context and motivation behind this report. We'll share our methods and our research approach, our key findings, and then finally the policy implications of this research. Next slide, please. And next slide. So our starting point for this work was recognition that infrastructure investment as well as infrastructure demand are growing rapidly across the global south. And this would include a lot of energy-related infrastructure like power generation, transmission and distribution, upstream extraction, as well as transport infrastructure, including roads, railways, bridges, ports, and so on. And steel and cement are some of the key materials to enable this infrastructure. They provide structural support, foundations for power plants. They reinforce roads and are essential for rails, tracks, and structural elements and transport infrastructure. And they're a core material essentially in all kinds of infrastructure that enable modern economic development. However, the production of steel and cement in particular are highly carbon intensive even among other types of industrial commodities and construction materials. And the process emissions from cement calcination and the dependence of steel production on carbon-intensive blast furnaces mean that combined, these two sectors are responsible for nearly 20% of global CO2 emissions. And so in this research, we wanted to focus on how steel and cement are used in infrastructure projects. Next slide, please. At the same time, the GDP Center focuses on tracking and understanding China's overseas infrastructure finance. We know that China's development finance institutions, primarily the China Development Bank and the Export-Import Bank of China, have become central players in global infrastructure development and the largest bilateral lenders for global infrastructure projects worldwide. And this has led to economic growth in host countries by unlocking infrastructure bottlenecks and improving access to energy infrastructure, transport infrastructure, and so on. The BU, China's Overseas Development Finance Database, tracks $472 billion in loans from China's development finance institutions since 2008. These are public and publicly guaranteed loans. And the energy sector has been the largest destination for this finance with $184 billion since 2008. And transport being just behind that, the second largest recipient sector, spanning roads, railways, airports, ports, and so on. Next slide, please. And so a lot of attention has gone rightly to the composition of China's energy finance abroad and the transition from fossil fuel-based energy to renewable energy. However, as Mengdi mentioned, we really wanted to focus on another less understood climate-related dimension of all of China's overseas projects, which is the embodied emissions or embedded emissions in steel and cement that go into those infrastructure projects. And so this research that we've been doing represents what we think is a first look at being able to come up with a method to quantify this and also understand potential policy levers for decarbonization. Next slide, please. So in this study, we're examining three main questions. First, just to understand at a fundamental level how much steel and cement are used in Chinese financed infrastructure projects and how would we estimate that? Two, what are the associated CO2 emissions with that steel and cement used in China's overseas infrastructure projects? And then three, how could those embodied emissions be reduced through green procurement policies that would be set in China and regulate overseas infrastructure projects? Next slide, please. And the reason that we wanted to focus on green procurement as a policy lever for addressing this embodied emissions challenge is that it is a proven policy lever for creating predictable and large-scale demand for lower carbon products. There are public procurement programs, for example, in the EU that have already shown how setting carbon-based product standards can change industry behavior. And we think that there is the potential to explore the idea of applying similar principles to development financed projects from China. And doing so could not only reduce the embodied emissions in future infrastructure projects, but it can also have spillover effects by encouraging innovation and investment in cleaner industrial technologies and decarbonization technologies. So we think that the Chinese overseas infrastructure projects could potentially be a demonstration platform if such policies were implemented for scaling up these kinds of technologies that are fundamental for decarbonizing infrastructure projects as well as the industrial sector in the longer term. And I will turn it over to my colleague Hansia to talk about our research approach next.
Okay, thank you, Cecilia. So, yeah, for my part, I will focus on the introducing the research approach and also the first part of our major findings. So, to start with, so this research, in terms of scope, we focus on infrastructures receiving development finance from China's two major policy banks, so the China Development Bank and also the Export-Import Bank of China. So speaking of the data, most of the data we use are sourced from the two data sets hosted by the Boston University GDP Center. So it's China's Overseas Development Finance CODF database, updated last year, and also the China's Global Power database CGP. So we choose to use those two data sets. One reason is, so CODF provides the geospatial data, so which we can trace the exact size of and the length of transportation projects, like the length of railway and also length of road, which allows us to use that as a base to estimate the use of the material use. And China's the CGP database allows us to estimate the installed capacity of different power plants, and then lead to help with the material use estimation. So that said, so we focus on two sectors, so energy sector and power sector, with focusing on power plants, and also transportation sector focusing on roads and railway. So the reason, as Cecilia suggested already, why we focus on energy and transportation is because they together accounts for more than 70% of China's overseas development finance. So they are the majority and they are heavy in material use. Okay, so next slide, please. Yeah, thank you. So in total, we analyzed 233 projects, and we only exclusively focusing on new projects, excluding all the retrofit or rehabilitation projects. This is mainly because on the using geospatial data, we could not effectively differentiate between new projects or retrofit projects. And based on for all the literatures of material intensity we've resorted to. So most of literature were focusing on new projects, so we have a better idea of how much material would be expected to use in new projects rather than retrofit or rehabilitation. But we agree there is a limitation because retrofit or rehabilitation accounts for about 40% of all projects. That's why you would say the 233 projects might be smaller than what most people would expect. And we also, like zooming a bit further. So for energy projects, we include major types like hydropower, thermal power, and for transportation, we work on roads and railways. We also further categorize projects by their status, so they're completed or under construction, under planning. We would say so. Most of the majority of projects are completed projects, which allow us to estimate. So next, please. So the first step of our methods is to estimate the material demand. So exactly how much cement and how much steel were used in these projects. And so our estimation is based on the equation that material intensity multiplied by infrastructure scale. And material intensity, for power plants, the unit is a ton of cement or steel per megawatt of installed capacity, and for road and railway, so it's a tons of cement or steel per kilometer of road or railway. That's why we use the two GDP Center hosted database, which we know the installed capacity and also the length from geospatial data. And so for material intensity, the value we derive that from the majority from peer-reviewed academic journal articles and also retrieve data from previous multilateral development bank funded project reports, since they are more comparable to the projects funded by the China's two policy banks. And also we look into the industry and engineering literatures for a solid and as material intensity value. Okay, next one, please. Yeah, so here are some key assumptions we made for estimation as emission estimation. So for cement, because of the general weight and heaviness, the density of the material. So we made the assumption that they are all locally sourced. They are less likely to be imported from China or elsewhere. And for the global average carbon intensity of cement, we use the value 0.68 tons CO2 per ton cement. And for steel, because the source of steel can be more diverse, so we created three sourcing scenarios. The first one is 100% still 100% domestic manufactured, or they are 100% sourced imported from China, or it took on a 50% mix of domestic and Chinese imports. So we made an assumption because it's from project reports or from contracts. It's hard to get all this information, and second, they never really disclose the exact proportion. So, and also for the steel carbon intensity, we also the assumption are made based on different production routes and different country level benchmarking. Next one, please. So yeah, for key findings, the first step is the material demand. So how much steel and cement have been used in energy and transportation sector. So we found in energy sector, the total steel use is 1.29 megaton and cement use is 2.57 megaton. For transportation, it's 1.23 megaton and 1.04 megaton. So looking at the total amount, we find there are more significant cement use than steel use. And there is also an uneven geographical distribution of the use of these two material. Next one, please. So we'll see it here. So it's very uneven use of steel and cement use across continents. We see first, the majority of materials actually took place in Africa, so which is China's the focus of China's overseas finance, and then comes Asia, and the majority lies actually located in Southeast Asia. Then we see it goes to Latin America and the Caribbean area, with even less going to Europe and very little going to Oceania. And in all the regions, we see the pattern that cement use actually are more than the steel use. And so next, please. And so if we're breaking the material demand into subsectors within energy and transportation sectors, we can say, so coal power plants, so the one left, and the hydropower are the majority of where the majority of materials in energy sector lies. And if we relate that to last figure we've shown, so we say a lot of cement and steel use goes into Southeast Asia, where hydropower dominance, and also where coal plants are, where coal resources are more affluent, and also within the transportation sector. So the majority of material goes into railway, and while road only accounts to a relatively small proportion share. So next, I think I'm going to pass it on to my colleague Ali, and for the rest of finding.
Thank you, Angia. So to continue, once we quantified the scale of the quantity of cement and steel used in these projects, then we wanted to estimate the CO2 emissions associated with the cement use and steel use. So for the cement, as mentioned, we use an average, basically, emissions factor Many of the projects that were in like Africa, Central Asia, West Asia, like simply we don't have the country-specific emissions factor for the cement industry there. So we use the emissions factor of 0.85 ton of CO2 per ton of clinker, and the clinker to cement ratio of 0.8, and that gives us the 0.68 ton of CO2 per ton of cement emissions intensity. And then multiplying that by the amount of cement that is used in these projects, just presented by Hanjie, we estimated the total cement used in completed projects under construction and under planning. As you can see, in recent years, actually, there was significant reduction in China's overseas infrastructure investment, and perhaps Cecilia later can talk about that. So a lot of the projects were completed projects, and you can see the scale. We are talking about around 2 million ton or 2,000 kiloton emissions come from cement used in those projects. And then around 400,000 kiloton or 0.4 million ton comes from projects under construction, and much smaller projects that are under planning. Altogether, we are talking about around 2.5 million ton of CO2 emissions associated with the cement use. Again, not for all the China's overseas infrastructure projects, just the ones that we studied for energy and transportation. And even those categories, we studied subset of those for which we had good data that Angie explained. It still is significant. This could be equal to emissions from cement industry of some of the smaller countries. So it's not insignificant. But when you compare this to emissions from, for example, cement industry in China or some other larger country, then it becomes really small. And certain countries, for example, South Africa, Indonesia, Argentina, Ethiopia, and Angola, these 5 countries accounted for around 40% of the cement use and the embodied emissions of it. So a few countries had a large share in this. And one thing to add, a lot of projects China does is in Africa, and 3 of the top 5 consumer of cement and emissions related to countries in Africa, South Africa, Ethiopia, Angola. And that's where actually some of the emerging low carbon emission cement production, for example, limestone, calcine, clay, could play a significant role if China were to introduce the green procurement in its projects there. We just had an announcement from Ghana, the world's largest LC3 limestone calcite clay cement plant was just commissioned. So there's a huge potential there in Africa just for this particular technology as an example. Next slide, please. So moving to steel, we also quantified the CO2 emissions associated with the steel used in China's overseas investment project. And again, we had the quantity in terms of the ton of steel. And as Hanjie mentioned, we developed 3 scenarios. For cement, by the way, we did the analysis in all the countries that we studied. Cement used in China's project, overseas project, just using the short term, was less than 10% of the country's total cement production. So, and cement is, as mentioned, is bulky, heavy, expensive to transport. And if these projects using a small amount of total country's production, it makes sense to assume that that cement comes from country's domestic production. For steel, is a different story. Many of the countries we studied, the steel that is used in these Chinese projects accounted for like 25% to 80% of total steel production of that country, host country that's hosting the project. So you can see, and they're having, of course, many other use for this steel that they're producing. So it was not reasonable to assume all the steel coming from the domestic production. And 4 of the countries we studied actually did not have any steel industry domestically. For that reason, we developed 3 scenarios: 100% domestic steel use, except the 4 that don't have a steel industry at all, some of the African countries, I believe, and then 100% Chinese steel use, and then 50-50. And under those scenarios, you can see the basically emissions associated with the completed project under construction and under planning. We are talking about anything from around 3 million ton to a bit over 4 million ton, in that range of CO2 emissions associated with completed project. If you add the under construction and other project. On top of that, we are talking about basically 3.5 to 4.5 million ton. And that's, to put that in perspective, that's equal to emissions of like one integrated steel plant that has around like 2 million ton production, or number of 5, 6, depending on the capacity of like electric arc furnace plants. So this would be equal to the steel production in many countries, the smaller, medium-sized countries, like when you compare. But again, when you compare it to China itself, where it has hundreds of steel plants, then is not as significant. Next slide, please. So that was the emissions associated with the cement and steel use. And then we are proposing to have this green procurement, and then to kind of put in numbers the scale of the impact that we could have, or China could have, if it introduced some sort of a green procurement buy clean policy in its overseas investment project. What could be the impact? We developed several scenarios: low, medium, high, transformative, and we basically assign different low to ambitious impact in terms of percentage reduction from the current baseline CO2 level. Like the current CO2 level of cement and steel that we use to estimate, that is given. And if China produces a green procurement policy that says, for their project in these countries, they use cement that has like 15% lower carbon intensity compared to the current baseline, what would be the impact? Or if it's over time goes to 75%, what could be the impact? And we have done that both for cement and steel. And in the report, we have explained how these levels of green procurement threshold could be achieved. Of course, if you talk about 15% for like cement, with some efficiency and fuel switching to lower carbon fuel and a bit of SCM, you could get there relatively easier. But as we move towards the more ambitious target, like 75%, then you want to maximize efficiency, maximize the use of low carbon supplementary cementitious material, and definitely when you talk about 75%, you probably need CCS and other transformative technologies. And for the steel industry, kind of same story in concept, but the technologies would be different. 15%, perhaps we can get there with energy efficiency and some more use of scrap in steel making. But as you move to 50%, 75%, then you need definitely more scrap EAF making. You need low carbon fuel, and then we are talking about technologies like hydrogen, DRI, etc., to get to much lower emissions. And these are just to put numbers in the scale of the impact that different levels of green procurement ambitious could have. Next slide, please. And based on these scenarios, we have quantified what would be the CO2 emissions reduction potential from cement use in the transport and energy project for the Chinese overseas investment under each of these scenarios. You can see under the 15%, like low scenario, 15% reduction from baseline, we are talking about 400 kiloton, less than 500,000 ton CO2 emission reductions. A lot of it would be associated to the completed project, of course, but then we have also under construction and under planning. And as we move towards the more ambitious transformative scenario, we could have emissions a bit 1.8, a bit higher than 1.8 million ton emissions reduction by introducing green procurement for cement in Chinese projects. Next slide, please. Same story here, but for 3 different procurement scenarios. For steel, the light blue shows the emission reductions that we can achieve under the 100% domestic steel use, and then the other one is 100% Chinese steel use, the dark blue, and then the gray one is for 50-50 Chinese versus domestic steel use. Again, under low ambitious scenario, when we have 15% reduction, we are talking about 500,000 ton to 0.7 million ton emission reduction. And as we go higher, we could see emission reductions in the scale of 2.5 to 3.5 million ton. And these are significant numbers. You can go to countries where the entire steel industry emissions of the countries is equal to this or lower than this. So again, when comparing to China steel industry, the numbers might be small, but when you're comparing to the steel industry of like 150 probably countries, these numbers could be significant. Another thing, of course, there is a lot of missed opportunities because big chunk of the projects are so-called completed projects. So those are basically gone. But moving into the future, many other projects to come, many are not even announced. We think that if you introduce this, it will provide a significant signal to the market, especially in some of these developing countries, in addition to their own local green public procurement. This could be an additional signal in order to incentivize production of low carbon cement and steel. Next slide, please. Okay, I'll turn it over to Cecilia to talk about some of the policy implications.
Great, thanks, Sally. So before I get to policy implications, I'll talk about some of the key takeaways from our report that I want to highlight to the audience. So as Ali was mentioning, you may have noticed that the magnitude of our findings is relatively small compared to, for example, emissions associated with steel or cement production in China, or the direct operational emissions of carbon-intensive infrastructure like coal-fired power plants. But as Ali said, these emissions that we tracked in our studies are still a non-negligible and largely unregulated source of CO2, and he provided some great examples of how they may be akin to production-related emissions in some countries. Another thing to note is that we were very selective about our scope for this analysis because we wanted to prioritize accuracy over coverage for this sort of first study, putting forth this method and making the case for looking at embodied emissions in China's overseas infrastructure. And so we looked at 233 projects in the China's Overseas Development Finance database out of more than 800 that have physical footprints in that database. And so better data on those other projects, which included ports, airports, fossil fuel extraction infrastructure, transmission and distribution infrastructure, for which we couldn't find good material intensity information, that would have very much increased our totals. And lastly, we only analyzed development finance. So this excludes the larger pool of Chinese commercial lending, foreign direct investment, and for example, construction or contracting type arrangements. So for example, we looked at 45 gigawatts of power generating capacity from the China's Global Power Database, but that database actually tracks over 100 gigawatts total because it also includes foreign direct investment. But again, for the sake of scope and accuracy with that geospatial information, we only focused on China's development finance. But we think we've put forward a method that could be used to dramatically scale up coverage for future research. And we know that, yeah, the total scale of Chinese lending, investment, construction engagements is in the trillions of dollars. And another key takeaway, as we showed, is that sourcing decisions, especially for steel, can really shape the carbon footprint of these infrastructure projects in terms of their embodied emissions. And so even with the types of steel available on the market today, there are higher carbon and lower carbon options, which I think speaks to the potential power of these green procurement policies. And the projects that we're tracking in this database to some extent going forward will have a choice on where they source their steel, which is more globally traded than cement. And then lastly, we do see a sort of trifecta of potential benefits for embedding green procurement policies into China's overseas projects. And this includes reducing embodied emissions, but also driving innovation in industrial production, and also aligning global investments with climate goals. Next slide, please. And so in the report, we also draw up a framework and we explore best practices internationally, focusing on green procurement policies at development financing institutions and bilateral lending agencies. And in our framework, we pull out several core elements for what could be or should be included in future green procurement policies. This would include using carbon intensity-based benchmarks to set thresholds for steel and cement procurement, and those should be based on life cycle emissions data and supported by environmental product declarations or EPDs or other third-party verified documentation. So this refers to independently verified and registered documents that communicate standardized information on the life cycle carbon footprint of a product. We also talk about integrating these standards throughout the project approval process, as well as during other stages of project development, and then to the extent possible, aligning with international standards and best practices. Next slide, please. We also thought about how this framework could potentially be adopted or implemented within the key stakeholders that influence China's overseas infrastructure projects. And we divided these into regulatory ministries, development finance institutions, and then the state-owned enterprises. So just briefly, for the regulatory ministries, many of these ministries listed here, they play a role in overseeing and guiding overseas development finance activities. And some of them are also involved in domestic grain procurement type policies within China. And so there could be a potential role in, for example, joint issuance of green procurement guidelines, working on or developing, supporting capacity for things like EPDs and verifying carbon data and leveraging that domestic experience. The development finance institutions are, of course, the key providers of loans and credit for China's overseas infrastructure projects. And so their financial policies and due diligence processes can have influence on material selection and environmental standards. So we think that green procurement policies could potentially become a part of project appraisal and risk assessment frameworks. And then lastly, state-owned enterprises are, and in some cases, private enterprises are some of the main implementers of these construction projects overseas. They may plan, construct, or even operate some of these large-scale infrastructure projects in other countries. And so this role is especially important when they are providing those construction services. And so to the extent that they work with or are regulated by the previous stakeholders, we also think that the companies themselves could have the potential to incorporate carbon performance criteria or require information such as through EPDs for any materials that they are procuring. Creating pilot projects would be very powerful, working together with some of the other stakeholders. So we list a lot of potential options in the report, which I encourage you to check out. And I will turn it back to Ali for any final comments before we go to Q&A.
Thank you, Cecilia. I think we are running a bit behind, but just to wrap up, just to step back also, I think in the future we see China play even more important role in global decarbonization effort. They're already doing some good work internally. They just released their 15 5-year plan. Major steps they are taking. And as we all know, they're supplying the world with, PVs, solar PVs, and now EVs. So it is reasonable to say that in their global effort to, help developing countries, global south in their infrastructure development project, they slowly also include green procurement policy as they also introduce it domestically. It may not happen tomorrow or next year, but I think we need to show how this could be done, what could be the impact, and this study aims basically to do that. And hopefully we will see in coming years Chinese development banks, Chinese government, and as well as other development banks. So we have actually mentioned them in our reports as well, to take this embodied carbon into account as they finance infrastructure projects. With that, I think I'll conclude our presentation and hand it to Mengdi to moderate the Q&A. Thank you, everyone.
Thank you so much, Hanji, Cecilia, and Ali, for such a detailed and inspiring presentation. We now have about 15 minutes for Q&A. I can see there are already some great questions in the queue, so I'll just jump right in. Please keep submitting questions in the Q&A box as we go, and we'll try to get as many as possible. The first one is from Lily. In the recommendations, you mentioned that both ministries of China, DFIs, and SOEs have a role to play in this process. So, have you seen any appetite from Chinese SOEs and banks to adopt green procurement standards?
I can start on that one. So I think, we are quite curious to see reactions and feedback on this report from partners in China. But, I will be honest, I think that based on policy reviews and previous research, such as a report by Ali and myself on domestic green procurement policy in China, that the current state of regulation in China is led at the ministry level. So, for example, MOHURD, the Ministry of Housing and Urban Rural Development, or the Ministry of Finance have nascent green procurement guidelines. But for overseas procurement and from other stakeholders, I personally have not seen a lot of leading movement.
Thank you, Cecilia. Is there any other comments that Ali and Hanji wants to add? Go ahead, please.
Add on a bit on that. So there are also for overseas investment and cooperation, and also like investment and construction projects. So they have also published like guidelines. So so the Ministry of Ecology, Environment, and the MOFCOM, so the foreign commerce one, they also have green development guideline for overseas investment cooperation. There are also guidelines for ecological protection for for investment cooperation and construction. So it's definitely there are some guideline and direction, like interest from top down, and then it just takes time for SOEs and banks like to incorporate this and in implementation. So, but the overall direction is definitely there will be appetite to respond to all these policy changes.
And just to add a quick thing, in China, the way they usually they do a pilot project, often at the city level or provinces, and then they make it national for the domestic policy making. So in this case, I could see if they were to do green procurement, it would be more at project pilot basis, like for this project and that project, where the economics of it works. For example, you can get LC3 cement at the same or lower cost than the regular cement. Then at least for marketing, they could use it and say, for this project, we use low carbon cement. So we probably will see first project level initiatives like that, and before we see kind of a full blanket green procurement policy for overseas investment. That may take longer.
Thank you for sharing your thoughts on this. So another question is from Arif. It's kind of from a different perspective because we are confident that green procurement will have great potential as a climate tool. But from the economics perspective, what would be the financial needs for green procurement policy? Is there economic advantage or incentive for adopting green procurement policy in China, or would they rather see it as a significant increase in budget?
Cecilia, you want to go first?
I was actually thinking of you, Ali, and
Okay.
your work on the green steel economics, for example, and the green
Yeah.
premium.
Yeah, sure. Happy to start. Yes, for some of the so-called green material, low carbon steel, low carbon cement, there's a green premium. If somebody says there is not, they're lying or they don't know what they're talking about. But not for everything. Uh, I gave the example, for example, for LC3, there are documented cases that it could be, at the same cost or lower cost. That's why actually we see a pickup of this LC3, usually because it actually can produce at lower cost. But that's just one example. There are cases that you can procure lower carbon cement or even a steel at a cost that is competitive. But yeah, if you go to really like near zero or significantly lower carbon, that those ambitious scenario where you talk about, for example, green hydrogen, DR, and things like that, then yeah, you're talking about significant green premium that we won't see get paid for such projects in near term. So it would be more case by cases. Another thing to keep in mind, uh, in advance case, they would go by project, not by material, like what we see, for example, in the Netherlands. You basically evaluate embodied carbon of the project. And there you can have more levers and options. You don't need to just have low carbon cement. You can basically design a better concrete mix and lower the embodied carbon of the project. You can design the building better and lower the embodied carbon of the project. So that's a gold standard, and that's actually another direction or another program design. Instead of just setting the carbon criteria for cement and steel itself, set the carbon criteria for the project. There you can have many more levers to use even a bit more expensive material, but the entire cost of the project doesn't increase or even decrease. So yeah, it's a whole full discussion, but these are a few reactions I have.
Thank you, Ali. Now we kind of want to go back to the first question raised by Christy. This topic has been briefly touched upon during the presentation, but our speakers think it's a good question and they are happy to elaborate more on this. For total cement used across continents in the study, is that showing how much Chinese-produced cement is exported to those markets? And if yes, how does that compare to China's overall cement production?
I can start, and yeah, we appreciate that. Probably, Christy, you said you answered your own question, but we still think it's a good question. And just to highlight some aspects of this study, which is that we didn't trace, for example, trade flows, which I know Ali and myself and others have done a lot of work, for example, on tracing embodied carbon in trade, but rather we looked at the amount of cement that would typically be needed for this kind of power plant or other infrastructure project, and then made assumptions about sourcing decisions. So we weren't looking only at projects that only use Chinese materials, for example. And Hanja did some like case study searches, and this is a topic of attention and potential controversy when looking at China's overseas financed projects, which is the degree of requiring Chinese materials, labor, etc. But that was not something that we explicitly explored, although I think we saw some case studies where there might have been requirements to use Chinese steel, for example, but also cases where that wasn't a requirement. So there's no like blanket standard or policy that we could find on material sourcing for these Chinese finance projects. So yeah, I thought the question raised some interesting points that we wanted to highlight. And yes, as Ali mentioned, and in the report we show how China produces a lot more cement than we track in these specific projects. I think almost 2 billion tons per year. So of course that's much higher, but we still think that this is a important lever and potential sources of emissions. And I'll leave it to others if they want to comment on that.
If there are no other comments, I'll move to the next question. I think that will be the last question that we'll have time to answer. This one is from Sian. It seems that CO2 emissions associated with 100% Chinese steel used are higher than other types of steel used. Do we know how much is the percentage of the 100% Chinese steel used compared to other categories in these overseas projects? And how much do you think the green procurement strategies might impact the China steel industry?
Maybe I can take that. Basically, as mentioned earlier, we don't know exactly how much of the steel used in these projects are Chinese steel or domestic steel. But what we know is like how much steel is used in a project and in this project as a whole, projects as a whole, and then we compare that to the total steel production capacity in some of the countries. And for many of the countries, as I mentioned, the range was between I think 25 to even 80%. And in a country, they use the steel that they produce for many other things. So it was not reasonable to assume that all the steel that is used in these projects are coming domestically. But we didn't have the number how much of it is coming from China. So we decided to go with three scenarios. One is 100% of the steel coming from China. The other one is 100% is supplied domestically. And the other one is just a rough 50-50. Of course, it's not the perfect number, but it's just simply we do not have the number how much of the steel use coming from China. So that's why we developed these three scenarios. I think between these three scenarios, we kind of provide the range of the emissions and impact.
And I would just add on that the question noted that the CO2 emissions associated with Chinese steel are much higher. Just to highlight again that because 90% of the steel produced in China comes from the carbon-intensive blast furnace, basic oxygen furnace route. So according to benchmarking research done by Ali and others, that it's some of the most carbon-intensive steel in the world. And so just I think as we've explained, that is driving those differences that you see across the scenarios. But of course, there are other carbon-intensive producers and so on, but that's part of it.
And to quickly add, I just realized I forgot the second part of the question. How much do you think the green procurement strategies might impact Chinese steel industry? I think the direct impact, as you saw from our numbers, those numbers compared to Chinese steel industries in terms of production, steel use, and the emission, it's just very small, negligible compared to the Chinese steel industry. For many other countries, it would be equal to the entire country's steel industry. So the direct impact would be small, but it is a strong signal if Chinese government, or these major state-owned enterprises put green procurement as a major criteria for these projects. I think it gives a very strong signal in the direction to the market. And hopefully when this happens, China will slowly also implement its own domestic green public procurement policy. And that might even happen before this overseas investment by the green procurement. And these together would definitely have an impact and very strong signal to the market.
Thank you for answering the question. If there are nothing else that our speakers wants to add, as we are coming on the hour, so I'll just start to wrap us up. At first, I want to thank Hanjie, Cecilia, and Ali again for the great research behind this report and for sharing it in such thoughtful way today. I also want to thank the audience again for joining us today and for raising so many great questions. For full details of the report, please check it on the GDP Center website or just scan the QR code to access it. We hope to see you again in future GDP Center events and have a wonderful rest of your day. Thank you.